with. So I don't think it was really out of the ordinary. Really, when you look at the auto industry, everyone is worried about profit margins. We're at peak pricing levels, peak margin levels, so everyone's worried that pricing falls. This is a way to absorb some of those pricing corrections. New car pricing and mix is definitely going to have to come back because semis and chips are coming back. So now they're going to put chips in probably lower mix, lower priced cars. So by cutting these costs, which were always the plan to begin with, you can absorb some of that hit from pricing and mix coming down.
And what did almost everybody talk about today in great detail? All of the work that they're doing to take cost out. Because in this industry, in this business, you survive or you die based upon the ability to manage your costs. And so I'd like to talk about cost as well. If we look at our longest running scale production product, this is the Model 3. We reached 5,000 cars per week, which was our design capacity in mid-2018. And since then, we've taken 30% of cost out of this product. And there's 2 points I want to make about this. The first is that cost reduction, as you have heard throughout the course of the day, is deeply ingrained in our culture. And I think one of the most important reasons why we are here today as a company. The second point that I want to make is that when we're working on cost reduction, it's easy just to take cost out and make our products worse. But we have to take cost out and improve our products at the same time. This is the hard thing to do, but it's the necessary thing to do to continue to move forward. And as we look forward to our next-gen vehicle, our target is to reduce 50% of cost, and we've talked about that a bit earlier today. Going from the Model S and X platform to the 3 and Y platform, we took out 50% of cost, so the task here is to do it again. And this is very important because as we improve affordability, the number of customers who have access to our products dramatically increases. And as we link this back to our master plan, it enables an exponential growth in our volume with linear reductions in the cost of our products. The second point I'll make here is that, and again, cost reductions don't come from any single one place. And so you can see the buckets here on the vehicle side, battery and powertrain, manufacturing cost reductions, and others. These buckets are relatively equal in size. And so in order to take 50% of the cost out of the product, we have to go through everything. But more importantly than just the cost of the car up front, when we're transitioning to a sustainable economy, particularly with vehicle ownership, it's really important to think about the lifetime cost of the products. And this chart here is showing what the total cost of ownership per mile is over the course of 5 years. And we have to think about financing costs, insurance costs, the cost of power. Drew talked a little bit about that with the plants that we're doing in Texas, wear and tear and maintenance on the cars, et cetera. And we're already at a place today in the US where a base Model 3 on a cost per mile basis is less than a Toyota Corolla, which is the highest selling car in the world. And as we move towards our next-gen platform, we will continue to reduce this. And as we work on robotaxi variants of this platform, this cost will come down even further.
How do you evaluate GM's transition to EVs? Are they anywhere near the bumper of Tesla as we transition to the Tesla conversation? But how close is GM?
I mean, it's a little bit of apples and oranges, right? So GM is predominantly in North America, where arguably you don't need this huge ramp of electrification as quick as, let's say, you need in Europe because of CO2 compliance. So GM also has pickup trucks, which is such a great business. You don't really need to electrify those as quickly, even though they are. So it's really hard to compare the two. One is a clean sheet EV company. The other one's transitioning from ICE EVs. But even so, I think GM is doing the right things. They're vertically integrated with their Ultium battery cells, doing that in-house. There's only 2 other folks doing that. It's Tesla and Volkswagen and GM.
GM is not going to catch Tesla. What's going on, everybody? This is Crypto Deli here with another video. This one is making the case for the $25,000 Tesla that may or may not come out either the end of this year or next year. But this individual, he makes a good bull case for Tesla regarding the $25,000 $100 mark, which is really in the budget range.
Tom, let's talk a little bit more about Tesla, because Cathie Wood, who's been bullish on Tesla now for quite some time, scooping up even more shares of the automaker. When it comes to the outperformance as of late of Tesla, we know that there's some concerns out there about the ongoing investigations, most recently being the steering wheel that could fall off of a Model Y. How worried are you about that in terms of what that means for Tesla's investor story going forward?
I mean, this is par for the course for Tesla, right? There's always news and headlines like this. At the end of the day, I think people who invest in Tesla, they understand these issues, and they really look at Tesla as the ability to disintermediate the entire market. You know, it really reminds me of what Netflix did to the media industry a decade ago. You know, coming in and completely upending the industry, cutting costs significantly. You know, they don't advertise. The average cost of a car, something like $5,000-$6,000 of a car is advertising. They don't use dealers. It's about $1,400 off that. They found ways to cut costs in the manufacturing process. This is what investors really care about.
And cutting costs, and according to the Investor Day, Tesla did the other day, almost a week ago, they're trying to cut costs and production in their vehicles, which is great for the company's bottom line. If they could maintain that, it would be great on them to go and great for the investors.
Definitely, there's news items that will hit the stock every now and then, but its core investor base is really about the future of this company and how they can cut costs and effectively undercut the rest of the market. And their clean sheet approach, it's the only EV company, pure play EV company, that's actually seen its stock rise in recent months. And I think that's why investors are looking at EVs and they're saying this is the clear winner, and they're choosing it over a lot of other new EV makers.
Absolutely. I agree with him. You know, Tesla may have some bump in the roads. People may have gotten disappointed the Investor Day or whatnot. And some of them say that, you know, Tesla, Elon Musk overpromises and underdelivers. But as you can see, Cathie Wood is continuing to buy shares in Tesla because, you know, she understands what's going on. She understands the market, the industry, and the company.
You've got an outperform on a $223 price target on Tesla. It feels like a month ago, but I think it was just a week ago, Investor Day, when the perception was, meh. They did not give details about a low-cost Tesla, and it was a long 4-hour drawn-out talk about the sustainability of the planet. Net impact on the stock?
Yeah, I think that's maybe an unfair characterization. It was immediately my characterization as well.
Widely.
Yeah.
You
But
can
then
acknowledge.
a lot of when you like rewatch it over and over again after, it's like
You didn't do that
like
to yourself, did you?
Yes, I did.
Wow.
Yeah, but it's
It's a long one, too.
It's one of those where you have to what is that movie, like Memento, where you have to watch it a few times to really get it.
Yeah.
And you do that, and you realize if you read between the lines, he is saying there's going to be a $25,000 car, right? Because he's saying 20 million cars per year. It's his target. I don't think he's going to get
Which
there.
is nonsense, right?
Nonsense. But the fact that he's putting that.
And here another thing, of course, there we go with Elon Musk overpromising and under-delivering. But the $25,000 budget car is going to be hard to obtain, but we don't really know what's in the mind of Elon Musk, right? So what are the kind of $25K budget vehicles we have out there? You're not going to get much for it. Tesla cars are already basic regardless, right? And of course, according to Investor Day, they plan on cutting costs in the first place. So they could do it without even, maybe it could be $35,000, but with the incentives and what you would pay for gas, if you had a gas car, then it would equal down to the $25,000 car, which is what I think which is going to happen.
Out there, you're not going to get there with Model 3s and Model Ys. So it's just too expensive. He even said this much. And he had a chart which had a car with the nice blanket over it that had a big number on it in one of the slides. I think that's going to be the $25,000 car. That's going to have huge implications on the rest of the industry, especially for the things I said earlier. He can come in, undercut the rest of the market. And this could be a global vehicle. It's not just penetrating the US. Now you can go after Europe, of course, China. So I actually think when you really dive into the details, ability to cut costs on chips, right, the silicon carbide by 75%. Overall manufacturing, you showed how you can change the way you make the car and cut the costs in general by 50%. I actually don't think that it was as negative. And I think people can re-watch it and come to the conclusion, yeah, a $25,000 car is coming.
And that would be a huge win here for Tesla going forward. What about the Cybertruck? There's lots of debate out there about how much impact that's going to have, how meaningful that will be for Tesla over the next several years. What do you think?
Yeah, I think he was underplayed a bit during the event, also with the Optimus robot as well. So I would agree that's probably not as emphasized as it was in the past. To me, the big takeaway from this event, $25,000 car, not really so much Cybertruck, but I don't think you really need Cybertruck for the stock to work. It's really about upending the entire EV ecosystem.
So real quickly, that's kind of a specialty, you believe, as opposed to those who feel it's going to be mainstream and change the entire industry. You believe this is more the Ferrari model, if some have called it.
Yeah, it's probably more like the Model X and Model S, right? Those are pretty low volume cars. I'm not saying Cybertruck will be low volume. It has a ton of orders. But I just don't think you need that to work for Tesla stock to work. Again, this $25,000 car is going to be game changing. Also, Model 3 and Model Y have a lot of runway ahead.
Those are the catalysts up ahead. All right, Tom Narayan, great to have you. Thanks so much. RBC Capital Markets lead equity analyst for.
We're all waiting and looking forward to this $25,000 car. And of course, as investors in the stock and in the company, we want the world actually to embrace this new Tesla vehicle whenever it comes out, because, that means the stock price increasing. So we'll just have to wait and see. Of course, Elon Musk is can't always take everything he says by heart, but just take everything by a grain of salt.